So what have we seen from an analysis of the major 4 banks' results in this reporting period? So what we have seen overall is a decrease in cash earnings. However, this is impacted heavily by some one-off items. If we strip those out, then we have seen a moderate increase. And there's probably 3 key things I would call out. The first, the banks absolutely remain fundamentally strong, particularly when you look at them on a world stage. So even though returns on equity have decreased, again, you would see them hugely more profitable than a lot of the banks overseas. The second thing is the external environment that's impacted them. So a lot of changing conditions. So things like the requirements to increase capital, funding requirements, regulatory requirements, offset by some strength around asset quality. But credit quality, I think going forwards is going to be more challenged. And then the third thing is the overall sentiment in the market, the focus on do we need in the industry a Royal Commission. The ABA have come out with a number of self-regulating recommendations, and we've seen ASIC move towards a self-funding model. So how are the banks going to really thrive in that environment?
Of all the movements in the recent bank numbers, the one that's most stark is the fall in return on equity, down a whopping 245 basis points to 13.75%. Even when you strip out the important one-offs, that number's still just a touch over 14%. And with the ongoing regulatory pressure on the banks to increase their capital, plus all the challenges of digital disruption, we still think this process has a way to go.
So cash profits for the half were $14.89 billion, which were down a touch under 3%. When you adjust for some one-off items, they were up just under 2%. The key drivers of that growth are lending growth in the economy and some tight margin management. We saw approximately a 5 basis point increase in margin driven by mortgage repricing and deposit repricing. That was pretty much offset by a 4 basis point reduction due to wholesale funding costs and the impact of regulatory change. Bad and doubtful debt expense rose by $834 million in the half. That was primarily driven by single name large exposures rather than overall portfolio deterioration.
With a constrained growth outlook and ongoing regulatory pressure, how can the banks continue to deliver outperformance on a global stage? Cost will continue to be a key feature of banking into the future. To be successful, we think that banks going forward will be simpler, they will be smaller, and they will be more deeply connected to their customers. Simpler banks will have the courage to undertake more radical rationalization of their product and service suites, stripping away much of the complexity, allowing the cost promise of a digitized operation to be fulfilled. Smaller banks will accept that some traditional lines are shrinking and not delivering target results. They will make the tough choices in allocating their scarce capital, be that human, financial, or physical, and choose where to play to win in order to optimize the returns. Banks that are more deeply connected with customers will be solving problems they haven't solved before, like tax, or inventory management, or accounts receivable, or accounts payable, or perhaps finding somewhere to live, or a school for kids. And to do that, they're going to leverage technology and they're going to partner with organizations to aggregate services for customers to solve those problems.
Building trust is an absolute key priority for all of the banks around the world, and I know in Australia that's also a key aspect that they're all looking at. It's a big challenge, I think, because it requires a change in behaviour, cultures, and it actually requires the banks to be different in the way they operate from almost any other business that deals with customers. So sales targets are really a thing of the past, I think, in banking. It's how you achieve a good customer outcome and a compliant sale, be that in a commercial loan or a retail mortgage. Good customer outcomes and how you do that.